When you think about trading gaps, most of the comments that you'll hear are, oh, you can't find them, they don't, you just don't bother, you know. But there are a few people that trade gaps, and by that what they mean is at a minute after the market opens, they find the stocks that have gapped way up or gapped way down, and then they trade them. When I talk about trading gaps, I'm talking about locating those gaps before they happen. And I'm not aware of any other system that anybody talks about that can see that occurring. And it's rather interesting. It's exciting, to say the least. And I think you're going to find it amazing that you can look at these indicators and see how they react. This video is going to be a classic explanation of a number of key things that we see and use in the system. Now let me switch over to the charts, and I want you to well, here, first of all, I am in BLT, that would be Bravo Lima Tango, and I am, the date on this red vertical line is December 9th, 2015, and I've got what happens here is on this day it closes at $5.38. The next day it opens at $9.87 and goes up over a little over $10. So this is like a 100% gap. So whatever stock you were able to buy, you can end up with 100% gain in the blink of an eye. Well, actually overnight. While I'm on that idea, let me comment about the email system just briefly. We have two email systems. One of them, I'll just say, would be like a normal email system. It's sent out in the evening or a few hours after the market closes, and it's we have alerts almost every day. The alerts are not guaranteed. Excuse me. The number of alerts that we send out in a month are not guaranteed. We want you to examine the alert when it comes to you and see if you agree with how we're seeing the market and make your own decisions. This is not we send you a symbol and tell you that it's going to go up tomorrow and you just buy it. Yes, we've done our research. Yes, we have identified, and we have a high probability to believe that that's going to occur. But you also have extenuating forces in the marketplace that can just really cause havoc with people's trading, and that's primarily your exchanges, because they have the ability to do things differently. The other email system is a gap email system, which basically would be in this system, and we have this alert set up to pick off these types of gaps. We don't get everyone by any means. We just don't. Sometimes the system doesn't pick them up, even though it appears to be set right. But if you're familiar with the platform, you know that you can set scans and do things that will alert you to these gaps. And if you're interested in building your own scans, just go to the section on the website where we show, by example, we show how to build a scan. But in any case, when you have a gap up, there is a critical key that is obvious to that gap up, and sometimes you have different a combination of different things that occur. And so in this, enough said about the emails that you can receive, but I want to talk about this one from the perspective of the zip chart for the moment. The zip chart is over here on this side. The power chart is down here. Over on the left side, I have all four charts set up for the discussion. The first thing that I'll point out we're going to be, let me first of all pull over the vertical line this day. This is the day before the alert jumps 100%. It's the same line that I have set over on this daily chart over here. And as you can see, we have zip green at the bottom, and we have zip pink. Actually, there's a number of them. Zip pink, red, and zip gray have all been down. Zip yellow have all been down low, and now they've bounced up. But the zip green has remained at 0. That happens a lot. Oftentimes, the day after this occurs is when you get the zip green that leaves the 0 and then goes up. And you identify with that because many of your other lines that were down low are now going to go up. Bingo. And zip pink at this point right here was 1.63. And so in any case, you've got those indicators, the ones that were down low, your zip red, yellow, pink, and gray, they are all in what we'll refer to as a low angle up. In this case, they're actually more than a low angle up. Some of them might be just in the category of a bottom of cycle turn. When you go down to the power chart, you have first off, you have the power red that's in a low angle down. That's indicative of, obviously, of a turnaround the next day. It's also with a green candle. And if I move over here to the trend chart, this is a normal reaction to a reversal pattern. One of the first things that happens is your trend red goes up. And if you've seen some of my other videos, how we look at green candles when trend red goes up or when something else goes up, normally would be the swing pink down here. When that goes up with a green candle, that tells us a lot about what's going to happen the next day, or I should say gives us a high probability of what's going to happen the next day. Because you've heard me say before, I'm sure, that your zip pink, I said that wrong, your swing pink and your zip red are your two fastest moving lines in the system. Now, the other thing I want to point out is I'm going to expand this swing chart and show you that your zip yellow is up and your zip gray is down. Now again, this is there's numerous videos on these two lines being opposite, because there's a lot of divergence in this particular day that we are examining. This is the day before the gap goes, the price goes up. I mean, think about what we're discussing. If you are able to find this stock and buy it, whatever you can buy, you're gonna end up with about 100% return on. So it's pretty fantastic in its ability to make some profit. Now, that brings me to the idea of line pairing, because again, if you've seen the line pairing video, you know that we design the system with pairs of lines in mind. Like excuse me, like for example, the swing pink and the swing Zion, and the swing red and the swing green. They're obviously your long-term trend lines. But if you go back over here to the power chart, and if we've seen that we got a power red low angle down, which is indicative of a next day up. But one thing that's really exciting here is in our paired lines, our power blue and pink, we have divergence. One's up, one's down. In your other pair, your power yellow and your power white, one line is up and one line is down. The one other key thing that I'll mention in this is you may or may not have seen the video or some of the videos that I've commented on this. When you get an upturn, or when you get a reversal on the bottom of a cycle, this is an obvious sign in your trend chart. Your red line goes up. Sometimes it goes up over the green, but your green line is typically continuing down. But what you need to identify here right now and keep in mind is, and it'll give you the ability, because you can set this on a scan. You can set a difference of two lines on a scan. And the difference that I'm trying to point out here is your trend green, which is at minus 32 right now, and your trend blue, which is at minus 5.85. So it's from 5 to 32, it's got a huge spread, and that spread has to be somehow pulled together. And it's actually a picture of divergence, because you don't see the green and the blue separated that far very often. But that's just that's kind of like a rabbit trail, but I did want to point that out. There's a few other things that I do want to point out, but I have not spoken yet about the key. Where is the key to this gap up? I'm not sure if you see it yet, but it's sitting right over here in the power chart. Okay, you've got, actually, let me say this. You've got one big key, but it's in a multiple line situation, and that is your the number of pairs of divergent lines and the number of basic reactions to them. If they're not divergent, like your power white and yellow and your power blue and pink, or your swing yellow and gray, or even your red and green. I mean, I don't think of them as divergent, even though they are divergent. To me, they're the beginning of an uptrend. You've got all of those, and the rest of them, like over in your zip chart, those are reacting just by going up. There's 3, 4, or 5 of those. The blue line is going up as well. You can throw all of those together and see that the number of them reacting, they become a key in themselves. But that key is a secondary key to the primary observation that we see. And this observation can be put into a scanner and spit out, and you can pick these up. And this happens a lot. And it's basically the power green going down, and it's above the power orange, which is going up. Now, this always happens in a downtrend. You're going to say, well, this is not a key. Well, it's one of those keys that that we can identify with real quick, because you can pull up, when you do a scan on a power green line going down while the power green line is above the orange, you only pull up so many possibles in a scan, and so you can review those relatively quickly. And when you go to review that key element, then you find all of these divergent lines, and you find green at 0, but the pink is up above it. And you know from experience that the first day the pink goes off of the green line, you typically have a nice green candle the next day. So we would typically have a nice green candle in here. But because we have other factors going on, we have just a tremendous increase in, we have a huge gap. But let me tell you about 2 additional factors that are a little bit abnormal to this key. This is the key right here, okay? But the 2 factors that really add to this key are that this green coming down over the orange, it typically happens when both of those lines are above 0. And the final key, and probably the most important key, is that typically you see this green line coming down, or they appear to go, the green and orange appear to go straight across at 0, and then all of a sudden you see a huge gap up. But they're above 0. But that green and orange line are usually separated by, it can be a larger distance than what you think. But when you go over here and you look at the data window, you see that the power green is let me hit that again, make sure. The power green is it's a minus 0.102. The power orange is a minus 0.112. So they are, looks like about 1,100th, about 1/100th of 1/100th of 0.1 apart, which is very narrow. But the key is that the green is above the orange. Now, I've even seen that green go down below and then come back up, but it's tougher to get a scan to show you those. You have trouble finding them. So that is the key to in this case, it's a combination of keys, or it's a combination of observable facts that we see. I mean, number one, we know it's going up. I mean, there's just so many issues that tell you that just your, going back to your basic power chart, your red line is in a low angle down and it's going up tomorrow. But how would you find this? You're going to end up finding it on a scan. Either you're going to throw a scan together and print it out, or this one will show up on our alert system. Sometimes they don't because of things that happen. Sometimes we would write this as it's above 0, and this one ends up being below 0. You end up playing with scans quite a bit and revising them and making multiple scans to find multiple alerts. But in essence, the close proximity of the green and the orange is probably the #1 factor. The fact that it was above, or the fact that it was both of the orange and the green power lines were under 0 when this took place. I mean, that it tells you when this, normally when the green line crosses the orange line and they're both under zero, you're in for a huge downturn. I mean, normally the green crosses the orange when it's up high because it's gone up and then it comes down. But and here, let me give you another just quick comments. Right here, you've got. Remember in the pairings we talk about the zip red and the zip gray running together, but in my signals videos, or maybe in other videos you've heard me talk about how the zip green and the zip pink have a relationship. Exactly how that functions is hard, or how that operates, it's hard to describe, but let me just identify it right here. The zip green is at zero. Most of the time that's what happens, and the next highest line is your zip pink. And you got a zip pink and a low angle up with a zip green at zero, and what's the reaction? You get a nice gap up red candle. If you take this green line over to here, you got a zip green at 100. You got a zip pink, which is your next lowest line. Now, this can certainly go up the next day just looking at those two lines. But you know, you've got a doji candle. You've got a power cyan that tells you, hey, things are going down. You've got a power white that has up touched the wide orange power line, power orange line. And so there's just a variety of, I mean, that's just the power chart. We haven't even looked at the other two charts. So you can tell this candle right here is going to go down tomorrow. I mean, it's just one amazing system. This is one of the stories about how you identify gaps, in this case a gap going up, because we do trade gaps. I'm excited about it. I think you can see why, and whatever you do, especially when it comes to gaps, I mean, be comfortable about what you're doing. Identify what you see happening, because the single most important, in my mind, the single most important thing about trading is that you identify the trade, because that's what makes success in this business. And so trade reasonably.